Okay, I'm in, and I think it's recording.
Great.
We'll see. Yeah. Okay, so should we start?
Yeah.
Okay, so welcome, guys. This is our first Bulls, Bears, and Battlestar Galactica on Twitter Spaces. Hopefully, there are not many bears this week. Everyone is kind of trying to sell off and go hide somewhere, but yeah, hopefully there are many optimistic people here trying to hold for the long term. So today we have three speakers. Investor Coach, he's going to present Pinterest. Innovestor, he's going to present Airbnb. And the Wolf of Harcourt Street, he's going to present DocuSign. We'll try to do like some Q&A after each presentation if one of the listeners wants to ask a question. Hopefully it won't be a boring. We will try to do it like more so like a back and forth discussion and not like a 20-30 minute monologue. And of course, obviously, this is not investment advice or anything. We're just regular guys, regular millionaires trying to, talk about our favorite companies and favorite stocks. So let's start with Innovestor and Airbnb. I think everyone knows this company. I mean, even if you're not an investor, you have used Airbnb somewhere at some point. So if Investor can give us a bit more of a background of the company, what's the business model and stuff like that to get started.
Yeah. So I haven't done one of these before, so bear with me if it's not exactly smooth. Right, so
it's our first time here for everyone, I think. So we don't need to worry.
Yeah, good. Right, so we've all heard of Airbnb before, but I'm going to briefly describe the company before moving on to some of the interesting stats, and then where I think the company is going to be within the next 5 or 10 years. So a bit of company background. So Brian Chesky and Joe Gebbia came up with the idea of air bed and breakfast, where you can sleep on a random person's airbed in their home. So they basically match you with a random person, and the pair trialed this idea at the South by Southwest Festival in 2008, and from there on out, the idea was born. So over the next 12 years, the company went from one milestone to another, leading up to one of the biggest IPOs of 2020. And this IPO was good timing. So for a company that derives pretty much all of its value from travel, they went public at a time when the world was basically shut down. And I think part of the reason why this worked at the time was down to sentiment that the Airbnb would be the perfect reopening play. So basically capitalizing on over a year's worth of pent-up demand. And I think that still holds true, to be honest. So how do they make money now? So Airbnb are essentially a middleman. They operate in a two-sided marketplace where hosts are charged around 3% of the rental fee, and guests are charged around 6 to 12% of the rental fee. And that's basically the core of the business. I mean, they also have the experiences element, which collects around a 20% margin, but that's not quite as developed yet. But once they get that going, I'm sure if they can get the volume on that, they'll increase the overall margins of the business. And some interesting stats. So 2020 was a bad year, especially for travel, but Airbnb still had 5.6 million listings, 4 million hosts, 193 million nights and experiences in 2020 in 220 countries and over 100,000 cities. But they experienced about 4.6 billion net loss. So that brings me on to the bull case. I mean, there's a lot of good things to say about Airbnb, so I'll try and stick to as few as possible in the time that I have. So number one, the brand. I mean, Airbnb are a really strong brand. So sometimes brands manage to make their way into our everyday language, and we know how powerful that can be. So the best example I have is Google. And Google has almost become synonymous with the word search. And Airbnb have done something similar, not quite the same, but similar. So if I'm booking a holiday with my friends to, I don't know, Barcelona or Paris or somewhere, I'll say, let's Airbnb it. I'm never going to say let's Expedia it or something like let's Booking.com it. So that, combined with the sticky nature of the product, results in a low customer acquisition cost, and especially over the long term, and especially as economies of scale take place. So an interesting stat here is that in 2020, 91% of all traffic to Airbnb is coming through direct or unpaid channels, which basically means that word of mouth is working and key to acquiring customers. So number 2 on the bull case is that they have an attractive cost structure. So luckily, the premise of their business model means that the company don't have to own any of the underlying assets. So this alone gives them a lot of flexibility, especially from a cash point of view. And it also means their fixed costs are low, which means they can operate on a fairly high gross margin, which is around 75% at the moment. But there's definitely room to improve. So, for example, around 60% of their costs of sales relate directly to payment processing fees, which they don't pass on to the hosts. In addition, as the company scale and the brand becomes more well-known, economies of scale kick in, and operating costs such as sales and marketing and product development will decrease as a percentage of the overall revenues. And on top of that, they have the higher margin experiences aspect of the business, which, if that can grow, will likely push up the overall margins. So my point really is Airbnb have several levers at their disposal to pull if they want in order to improve the margins.
Just one question, is this experiences that you mentioned, because I've seen it like sometimes on the website, is it companies that have like, for example, like tours of sightseeing and stuff like that, or is it like individuals again?
Yeah, I mean, I'm getting feedback on your, there you go. So as far as I'm aware, it's individuals who are offering some kind of bespoke service. So a tour of the city, or showing someone around somewhere. So yeah, that's basically how I understand it. So the fourth bullet point I was going to mention was that it's a sticky two-sided marketplace. And so this one's fairly self-explanatory, but we have the buyers on one side and we have the sellers on the other. I mean, I think the beauty and the most valuable aspect of the model is that the buyer, the traveler, has the ability to easily become the seller or the host. This means that Airbnb are maximizing or potentially maximizing the monetization of their customer base. And it's all because the product is sticky, so it's a good experience. We've all been on Airbnb before and had a good time because it's unique. It's a unique experience. Fifth, I think, is the fact that there's a large TAM. I mean, I think the company estimate their total addressable market to be around 3.5 trillion and their total serviceable market to be about 1.5 trillion. These are both huge numbers. And as travel.
So this 3 trillion is what exactly? Like the total addressable market for hotels, for example, or?
I believe it's. I'm getting feedback. Sorry. Can you mute yourself?
Not good. Can you speak again? It kind of like has some interruptions.
I can hear myself talk.
I think it's because you're recording, Costas.
Yeah.
Oh, but I have muted the sound. There is like no sound from my phone, from my other phone.
If you mute your account now. Yeah, there we go.
Yeah.
It's so hard to talk and listen to yourself talk. What was the question? The total addressable market. Yeah, I think that's the travel and leisure industry. To be honest, I'm not 100% sure. I took that straight off their investor relations site. So that's something I'll have to go back and check. But yeah, total addressable market is 3.5 trillion. And the serviceable addressable market is around 1.5 trillion. And they're both huge numbers, as travel and leisure represent a large portion of the GDP. So I think massive opportunity there. Another one is that they're founder-led, something we'd love to see. And also Airbnb, they're playing on the changing attitudes towards travel and work. I mean, the pandemic has completely changed our idea of what it means to work. I think we're moving towards a more flexible way of living where we don't have to be tied down to one location all the time. And Airbnb are in a good position to capitalize on the changing attitudes. So again, massive opportunities there. I mean, there are several more ball points I could cover in the future, but I'll leave them there for now.
So do they have like any plans to become kind of like a WeWork, that they have like big spaces where you can like rent to go and work or stuff like that? Or is it just mostly hospitality for the future?
Yeah, I think. Oh, Cosmo, can you mute me again? Cheers. I'm honestly not sure about the. I'm pretty sure it's just the hospitality stuff at the moment, but again, that's something I'll have to look up a bit more in the future. So I'm not sure what the plans for the future are. But that leads me quite nicely into the next point, which is some ideas for the future. And this first idea kind of relates to Pinterest. So IQ or anyone else, you might have an opinion on this one, but I wonder whether in the future Airbnb might have a Pinterest-like social media aspect to it, where it's used as kind of a travel and experience inspiration board, you know. So users can post photos and videos of homes and experiences to share on the platform. Then other users who are, say, going to Paris or Barcelona can search up that city and instantly be met with a wall of inspiration of, you know, where to stay and what to do. So it's giving the platform more of a social feel by connecting the user, which is something that's slightly lacking at the moment. I think it's definitely an idea they can integrate. And
can like the Airbnb hosts now, like for example, use ads on Facebook to connect to their Airbnb like listing? Like for example, like someone can go to Pinterest and create a pin and link to his shop or something if you want to buy something. Can you do the similar with Airbnb to advertise your experience or listing?
I mean, I suppose you can. Yeah. I mean, I'm not a host, but I would guess that's something you could do. But I think I'm talking more about an integrated feature into the app. I mean, I'm sure you can set up some kind of Facebook ads or link it to Pinterest in some way. But if they can integrate something like that into the Airbnb, you know, ecosystem or platform, then I think people are going to be more likely to stay on the site and book through the site, because there's kind of an incentive to find something that's personal to you. But yeah, anyway, the second idea is less of an idea, more what they're currently looking into in the future. So the use of 3D real estate technology, so virtual tours, could be a key driver to getting more people onto the platform, you know. So over the past 2 years, these virtual tours are becoming more widely used with companies like Matterport. I think their ticker symbol's GHVI. And I think that's going to be a huge opportunity. But and then we talk about risk. So I think one risk that keeps coming back when people talk about Airbnb is this massive risk of local legal issues. So we'll all be aware of this one, basically. But the situation is that Airbnb aren't exactly as easily accessible in some cities as they are in others, and that's mainly down to the discretion of the local authorities, who kind of bluntly have the power to ban Airbnb or increase the cost so much that it doesn't get used. And this is a large resource drain for the company. I think they have one of the largest legal teams for a company their size, and it's for a good reason. So if they can work with the local authorities and keep expanding into cities in kind of a cooperative way, then I think the company will do well long term. But it's a significant risk, and it's definitely negatively impacting a bunch of cities due to rising house prices.
Yes, because like I think, for example, you mentioned Barcelona at the beginning. I think Barcelona has like kind of banned Airbnb.
Yeah.
And also Amsterdam, they banned like in the city center. And now, like for example, Prague and Paris, I think they're kind of trying to crack down on Airbnb, because like for example, I see here that they might say that if you want to make your apartment an Airbnb apartment, the entire building, like all the other tenants, need to agree, because they have created like many troubles, especially in the city center. many long-term tenants had to go because they couldn't live with 2-3 Airbnb apartments in a building where people come and go all the time. So I think this might be not sure how they're gonna handle it, because if the government says you can't make your apartment an Airbnb without any regulations, I'm not sure how they're gonna go around that with their legal team, because already cities are trying to crack down, and they've already done it, I think, in some cases.
Yeah, and I think yeah, thanks. So I think it's a big issue, and it's a big issue in, like you say, a bunch of cities. So I think Paris and I think Berlin's similar, and maybe Dublin.
Yeah, Dublin's really bad. The property market here is kind of screwed anyway. Just supply is just way below demand, and the Airbnb market especially has just crippled renters. Just everyone's renting their apartment out on Airbnb for you might rent it out over the weekend, and then it could be free for the week, and then just rents are just absolutely spiraling.
Yeah, I mean it's a massive problem. It shouldn't be trivialized. Honestly, I don't know how they solve the problem in the long term. I think they have a lot of difficult conversations to be had with local authorities to try and come up with a reasonable conclusion. But I think maybe government regulation could be a solution, but governments are notoriously slow to react to these type of situations. I don't know, for example, big tech companies and their data regulations. It's taken years and years for them to get to a kind of a semi-good place. So I mean, I don't know is the answer, but I think they're doing what they can at the moment to minimize the risk. But yeah, no, it's by far their biggest risk for sure.
What I think is that normally over the long term, the governments will do what benefits consumers, and I think here the answer is clear. Obviously, it's a risk, but I think over the very long term, it's probably less than what people think.
Yeah, and I agree. I think they'll find a solution, but it's not exactly clear at the moment, as I think the point. But yeah, so anyway, the next bear case is that I guess it's not really a bear case, but the lockup period expires shortly, and this is I don't know when exactly this is going to be. I think it's mid-May. Someone might correct me, but it's just something worth bearing in mind.
Usually it's 6 months, right? After IPO.
Sorry, Costa. Thanks. Yeah, I think so. When was the IPO? It must have been November time. So I'm pretty sure it's mid-May. But yeah, it's just something to bear in mind. It might be a bit of a bumpy ride for the stock price in the short term. And lastly, the growth is slowing for Airbnb. I mean, before the pandemic, we were looking at year-on-year growth rates of somewhere between 40% and 60%. But over the recent years and with the pandemic, it started to decrease. And actually, I think 2020 was just obviously not a great year. But yeah, it's kind of inevitable that Airbnb can't keep growing at these insane rates. It's just not sustainable, really. So to wrap it up, I'll just be a couple more minutes. So Airbnb are priced, they're definitely priced high in comparison to their competitors. So Expedia, Booking, Marriott Hotel even, especially with the fact that they're currently losing money. However, I believe the market is underestimating the long-term potential the company has, as travel represents a massive driver of GDP, and Airbnb are a category-defining leader in that. So just to round it off, I have a couple of questions I like to ask myself at the end of analyzing companies. So one, is it relevant? Is the company relevant? So do you use the product? Two, is the company differentiable from its competitors? And three, is the business model sustainable? So is the company relevant? I mean, yes, I use it all the time. My friends use it all the time. Even my parents know about it. So that's a big tick there. Two, is the company differentiable from its competitors? Again, I think yes. They're approaching the travel and leisure industry in a way that hasn't been done before. So a big tick there. And three, is the business model sustainable? I mean, this one is debatable. The path to profitability isn't exactly clear. And there's big question mark around the cooperation with local authorities and all that kind of thing. But if they manage to navigate those key issues, then yeah, I think it's a sustainable model. And they have actually showed in 2018 in past quarters that they're capable of making some positive operating profit. So I believe they will get there again, and maybe even sooner than we think. But yeah, overall, the standard method of traveling is facing a massive disruption, and Airbnb are offering superior product with a brand that's basically embedding itself into our language.
So if you can start like just from a brief introduction about the company, what they are, and what's the business model and how they make money, and then we can proceed to the more detail.
Okay. Well, I think mostly everyone here will know Pinterest because they are, well, one of the hot stocks last couple of months. Pinterest is a visual discovery engine, and it makes most of all of its revenue from advertising. Advertising comes in two forms. It comes in the form of brand ads that are to optimize brand objectives. So basically a company pays to increase its brand awareness. This revenue represents approximately 1/3 of total revenue. And then you have performance ads that are the ads that most people will be familiar with. That is to convert a viewer into a customer, and they make approximately 2/3 of total revenue. And just to point out that if you're a company that wants to purchase an ad with Pinterest, where you can do it through an advertising agency, which is common in international markets such as Europe, or you can directly purchase it with Pinterest, which is much more common in markets such as the US. So that's a brief intro of what the company does and how it makes money. And just to give a little bit of history about the company, it was founded in 2008 by Ben Silberman, Ivan Sharp, and Paul Sciarra. And it was actually not named Pinterest when it started. It was named Cold Brew Labs. And they did not launch Pinterest as their first product. They launched another iPhone app that actually failed, but gave them the idea to build Pinterest. The first app was focused on creating a catalog for shoppers, but people were not shopping using mobile apps at that point. So the team saw that people were using the app to send images of particular products to themselves with the objective of collecting them. So that's how Pinterest began, because Pinterest was just that and is still just that. So in 2009, they began building Pinterest, which launched in 2010 and required an invitation. And well, I probably know that you're familiar, but the company IPO'd in February 2019 at $19, which valued the company around $12 billion.
Oh, okay. So could you give us some information about how do they monetize and what are the user metrics?
Yes, yes. Of course, I think that well, the two main KPIs for Pinterest are the two main KPIs for almost every social media company, which are active users. Pinterest reports MAUs, monthly active users, and average revenue per user, or RPU. Well, in the earnings last week, Pinterest reported 478 million global MAUs, which was a 30% year-on-year growth. International MAUs were 380 million, or 80% of total, and they grew 37% year-on-year. And domestic MAUs were 98 million, which is 20% of total MAUs, and grew 9% year-on-year. For Q2, for next quarter, the company actually expects global MAUs to grow in the mid-teens region, but they expect domestic MAUs to stay flat, well, have a flat growth on a year-on-year basis, which actually means that domestic MAUs are going to decrease to about 90 million from 98 million. I think this is one of the reasons why the stock probably sold off the next day after earnings. The company also said that, which is obvious, that they have seen a strong correlation between engagement and lockdown ease, because people are staying less time online. So, and we have to remember that the pandemic obviously pushed user growth. In my opinion, I think it's not a worrying point that MAU is slowing down domestically, to be honest, because I think that 98 million from a total US population of 330 million is quite high, especially because Pinterest doesn't target the same MAUs as Facebook does, for example. It's a more specific user base. And
yes, because I think, like, for example, Pinterest is not like, we consider it like social media, but it's not like Facebook and Twitter when you go and chat or make friends or post your, vacations. I think it's like you go with the target of buying something or looking for ideas to do something. So it's not, I think 1/3 of the US population is more than enough for a user base at this point.
Yeah, that's what I always say. I don't think a 16-year-old that is in college is a Pinterest objective, but that same user could probably be a Facebook objective. So, well, Wall Street saw that it was a huge risk to this MAU slowdown, which I don't agree with, but well, we have to take advantage of the opportunity to maybe add here and there. Then I think that MAUs are important, but I think for Pinterest, the most important KPI is obviously average revenue per user, because especially because they are starting now to target monetization across the app. You should be aware that this metric suffers from seasonality, because I also have seen people that compare Q4 with Q1, which makes absolutely no sense in the case of Pinterest. Then to give some data about the quarter of the last quarter, global RPU came in $1.04, which was a 34% year-on-year growth. International RPU came at $0.26, so 26 cents, which was a growth of 91% year-on-year, quite impressive. And domestic RPU was $3.99, which was a 50% year-on-year growth. I think you can clearly see that international monetization lags domestic, but it's normal because the company started in the US and the advertising market is much more mature there. What I like to see is that even though domestic is our more mature market for Pinterest, they are still growing at a 50% year on year. So I think that's quite positive.
And could you expand more on the management, because I think for high growth companies, that's, at least for me, it's like a very huge factor to take into consideration. So
yes. So I think that the key person here is Ben Silverman. He founded the company and he's the CEO now. And what I like about him is that his vision has been really clear since the start of Pinterest. If you see if you watch an interview by Ben Silverman of 2012, he says exactly the same thing that he's saying now. He was a private company, now he's public. He doesn't care. His vision is clear, and I think that they are taking the steps to monetize the app, but these steps were laid down a long time ago. So they're just executing their vision, which I like to see. You can often like find management that doesn't execute the vision, because they are just executing along the way without having a predefined plan. And that's what I like about management. And Ben Silverman owns 7% of Pinterest, so I think that his interests are quite aligned with any interest of any shareholder.
Yes, at least if they have skin in the game, you can trust them that they will do the right thing. I mean, not always, but at least that's a good sign, and that they are executing a plan that's been laid out years ago. So could you expand a bit, like, for example, on the competition? I mean, they are not kind of a social media company, but still, I mean, I think we saw like Amazon trying to launch a similar platform where people can post pictures that will be linked to products. So if you can expand on that a bit.
Yes, well, I think obviously competition is one of the risks. I don't think that there is right now nothing similar to Pinterest, but at the same time, there are many companies that could do something similar if they invest what they have to invest. Examples are Facebook, obviously. Then Amazon, like you said, that I discovered, like I just discovered it last week, that Amazon has kind of a similar feature that is called Discover Rooms, where you can buy from, I don't know, you have a photo of a living room and you can buy the products. That's very similar to what Pinterest is trying to do. And if they have significant, if they do significant investments, they could obviously target Pinterest market, which I think they will in the future. But this is just for me time confirmation, because Pinterest has a first mover advantage. And I think that Pinterest is doing great in that they are developing a lot of features to help advertisers see that what they are spending on Pinterest is worth the money. So they can clearly see that if they pay 100 in Pinterest ad, well, they are getting more than 100 in sales. And I think that's very important.
Yes, I think for Facebook is like around $3 to $4 in revenue per $1 in ads. So I'm not sure, like, is there like a similar metric for Pinterest?
Well, I don't know. I don't know exactly that metric. Can you mute Costas, please? I don't know exactly that metric, but what I do think is that in Pinterest, users and advertisers are much more aligned than users and advertisers on any other platform. For example, on Facebook, I go into Facebook and I'm not going in to see how to refurbish my home, and I think that I can end it in a purchase. But probably I will go into Pinterest to see how to refurbish my house and to spend. So I think that alignment will probably, if I don't know if they even report that metric. I don't think so, because I have read mostly every report of Pinterest. But if they did, I suspect it would be quite high. My vision of Pinterest, for example, in the future, is a platform with a obviously lower user base than Facebook, but probably with a very high RPU. If not, well, Facebook is the king of RPU right now, but pretty similar to Facebook, because I think that they don't need so many users to generate revenue.
Yes, that's right. That's why I think I think you mentioned it before, like they have like less users, only 90 million, but these users go there with the target of buying and making a purchase.
That's it.
But in Facebook, it's like mostly you just scroll, and if you see a ad like that might catch your attention, but like for me personally, like it almost never does. But on Pinterest, I go with the intention to look something. Is it like shoes or a watch or home decor or whatever someone wants? So I think that's the important point there.
Yes, and
Yes.
if you take a look at the numbers in Q1 20, well, the last quarter, global MAU growth was 30%, while revenue growth was 78%. And you can see that the kind of leverage that they are achieving. And if you take a look at what they guided for next quarter global MAU is going to grow on a year-on-year basis around mid-teens, but revenue growth year-on-year is going to be 105%. So I think that you can increasingly see that they don't need a huge MAU growth to generate a huge revenue growth.
Yeah, that's right. So could you expand a bit on the current valuation in terms of, if it's overvalued? I mean, it's probably overvalued since it's like a high growth stock. But if you can expand more on that and what we could expect in the future.
Yes, of course. Maybe if I go now to see what the stock price is, it's even fairly valued compared to 1 week ago. But well, obviously it's trading around 21 times sales, which is pricey. It's a pricey valuation. It's clear, but you always have to pay premium for quality. I don't think there is a single, well, there may be, but probably small caps that are very, very, very high quality and trade at a low sales ratio. I think that it seems pricey, but at the same time, they're just getting started with monetization. So I think they can boost it really quickly. We're talking about a company that's growing revenue. Well, if you take into account the next quarter, growing revenue at 100% year on year. And if you take a look at compound annual growth rate for annual revenue, the last 4 years, it's more than 35%. So I think it's quite high. I don't know if I would call it overvalued. I would call it premiumly valued. I prefer the word because I don't think
That's
in
better.
10 years I don't think in 10 years you're gonna look back and say, oh, it was overvalued. So, and you also have to take into account that Pinterest has gross margins of 73.5%, I think, and adjusted EBITDA margins of 18%. I think they are not profitable on a GAAP basis, but they are getting there. Numbers are getting a lot better, and they have been profitable on an adjusted EBITDA basis in 2020. So I think it's not such. You're not crazy if you pay, in my opinion, obviously, if you pay 20 times sales for this company.
Okay, sounds good. I think we had, again, some listeners who requested to speak, but now they're not here. So maybe we can move to the next one. And in the end, if there are people who want to ask any questions, we can give them the mic. So the next one is DocuSign by Wolf of Harcourt Street. Let me mute myself.
Thanks, Costas. Great presentation so far, guys. So I'm going to talk a bit about DocuSign. So if anybody doesn't know this company, most people will think that the name, I suppose, of the company probably gives it away. DocuSign, signing documents electronically. But I suppose DocuSign is far more than meets the eye. It does have the market leadership in electronic signature, with about 70% of the market share. But if you were to scratch the surface on DocuSign, it's far more than just signing documents. Really, like the company's mission or his idea is to own the agreement cloud. So the agreement cloud, I suppose, is the entire life cycle of a contract or document. The signature of the document, it's probably one of the last things that happens. The document has been prepared, has been reviewed, has been agreed at that stage. So the signature is probably really the last part of the cycle, but it is definitely what DocuSign are best known for. And like the e-signature market alone is expected to reach 25 million in the next 5 years, which is, a pretty significant market. But if you include the agreement cloud, you're doubling that market. So that's 50 million. A 50 million TAM, I suppose, if you want to call it that. So why DocuSign, or what does DocuSign do that you can't just do with the pen and paper, I suppose? So if you're to think about paper, it's a legacy object. It's manual, it's slow, it's expensive, it's error prone, and it's just not an efficient method. In this day and age where everything is really digital. DocuSign's value proposition is really to eliminate all of that friction between as simple as having to print out a page, sign it, scan it, you know, store it, email it, all that sort of thing. With DocuSign, you can electronically sign a document from anywhere, on a laptop, on your phone, anywhere that you have internet connectivity. So that's really what DocuSign is trying to do. In terms of the agreement cloud itself, what DocuSign offers, you know, it's just really the end to end of an agreement, a contract, whatever you want to call it. So simple as, you know, drafting the document, you know, organizing preparers, reviewers, all that sort of thing, having pre-approved wording for your documents. So, you know, if you are a company that has lots and lots of contracts, you're not going to want to have differing agreements and terms with differing counterparties. So DocuSign really kind of gathers all of these similar contracts together, and you can kind of manage them centrally rather than having lots of different contracts saved, you know, on drives or on lots of different places like that. And the analytics part of the business is probably something that is most appealing to investors, I think. So they're really developing analytics that can essentially read documents, analyze documents better than you or I could do it, really. So like, if you're investing in DocuSign, it's not really just for an electronic signature. It's really for the entire you know, life cycle management. And one thing that I would like to kind of just highlight to listeners is probably something that's not probably as commonly known, is that they offer, as part of their contract lifecycle management, there's a payments function. So you could actually get your payment as part of the signature process. So you could have a contract, and you would send that across to your counterparty who's going to sign it, but you can actually embed payment as part of the signature. So the customer can pay with a credit card, debit card, Apple Pay, Google Pay, all of that. And then the payment is actually going to be timestamped on the agreement. And that's, you know, that's an audit trail. It's got proof of payment. And like, why is this really, really significant or important? Like, my background is accounting and finance, so this is really, really important, because one of the hardest things about having lots of different invoices is actually chasing payment. You know, you could have an invoice, a contract sent out to a supplier or to a counterparty, and you're pretty much chasing for that payment for the next 60, 90 days, whatever it is. With DocuSign, you're immediately getting payment. There is no cost of collection. You've received your money. There is no errors, and you're going to get the exact amount. And there's essentially no risk of non-payment. You've got your money up front, so you're not going to have any bad debts arising out of a DocuSign contract, because the contract is going to be paid as it's signed, which I think is something that's not really spoken too much about when it comes to DocuSign. I think this is going to be a really, really important part of the business going forward. So in terms of the actual pricing of DocuSign, like, you can sign up for a free trial, and you can get a trial of all of their solutions, but essentially it ranges from $13 a month, and for that it's just your basic really e-signature per user, going up as high as $638 a month, and that's essentially a business pro account. So like, with that, you've got everything. You've got the payment functionality, you've got the analytics, you've got full contract lifecycle management. So, you know, it ranges from, you know, so the beauty about that is that it's not just for big companies, it's not just for large companies. There's you know, a product or a service there within that range that is going to suit a corner shop, or, you know, a small business that just wants to automate all of this paperwork, to your Googles, your Facebooks, who are going to want the entire suite of analytics. So then moving on to the customers, based on the year end 2021, which is the 31st of January fiscal year, they had over 892,000 customers, and over 590 of them customers were generating over $300,000. So, based on that, we can conclude that there's not a concentration risk here involved with customers. And there's not one customer who is, contributing 10% to the revenue or anything like that. So that's quite positive. And a really interesting stat was that in FY21, they added 300,000 new customers. And it took them 3 years previously to add that many customers. So, that says it all really. Like, it's a phenomenal rate of customer acquisition. So what
are their current margins now and the revenues?
Yeah. So margins are really high. You've got a 75% gross margin on revenue. So looking at the FY21 numbers, we had revenue of 1.4 billion. And a gross profit there of 1.1 billion. So that's a 75% margin. And similar margins were seen in FY20, 75%, and FY19, 73%. So they have actually managed to increase the gross margins. And in terms of the revenue growth, the last FY21, they saw 49% revenue growth. Now you could say, well, that's expected. Everyone is at home, working from home. People are going to be forced to use DocuSign, but they have been growing revenue before that. So FY20, 39% increase, FY19, 35% increase. So it's not just a stay-at-home stock. And I think probably something that is quite important is that if you're using DocuSign, you don't just decide when you head back to the office, right, lads, forget about that. We're all going back to paper. It's not going to be like that. Sorry, did you have a question, Kostas?
No, sorry. You can keep going. Sorry.
Sure. So, okay, margins are very good, revenue very good, but they're not bottom-line profitable at this stage. They had a loss from operations of 175 million in FY21. And I suppose the biggest driver here is their sales and marketing expense. They're spending an enormous amount on this. They spend close to 800 million. And that's 55% of revenue. That is a lot of money to be spending on sales and marketing. I don't care what business you are, that is a lot of money to spend on sales and marketing. But they are growing customers, so you could argue it's working. The other side of the coin is R&D. They spend 271 million developing new products. They're always trying to enhance their contract lifecycle management suite of tools. So, I think that's money well spent. So if you were to deduct in the morning, if they wanted to be profitable, they could just stop spending on R&D and they would turn over a profit of about 1 million. And they could obviously trim sales and marketing, but this is a growth stock, so we are focused on growth. Have a look at the balance sheet. So FY21 cash of about 560 million. Total assets to liabilities 86%. I think that is quite high. It's up from 71% the previous year, but that is because they issued convertible notes. So that kind of explains that. And the other part of the balance sheet I just draw your attention to is an item called deferred acquisition costs. So this is pretty much an accounting treatment, and it makes up about 260 million out of 2.3 million of assets. So deferred acquisition costs, it's not unusual in its accounting treatment, but it is something to be aware of. So this essentially relates to costs that they have spent, or they've spent money to the value of 260 million, but they haven't included that in their P&L. They have put that on their balance sheet. And the reason they've done this is because it relates to contracts that haven't actually accepted yet. So if we were to think about 260 million of the DAC, deferred acquisition costs, on your balance sheet at the end of FY21, you can assume that is relating to contracts that are going to incept in FY22. So essentially from this year onwards. So it is just something to be aware of, and it's not unusual. It is pretty much an accounting treatment. So it's just something to be aware of, though it is something to monitor, I think. So in terms of free cash flow, they are cash flow positive. 215 million for FY21, and that's up from 44 million in FY20. So that is good to see the free cash flow increasing. I suppose the biggest thing then is competitors. Electronic signature, it's not exactly rocket science, if you ask me. So there are competitors, and Adobe is one of the biggest. And I suppose the benefit Adobe has is that PDFs and Adobe are pretty on most work laptops or machines. So Adobe Sign is kind of part of the Adobe document cloud. So it would include your Acrobat, your PDF pack, your scan, all that sort of thing. So revenue for document cloud for Adobe last quarter was 411 million. So pretty decent chunk of change. Now you compare that to DocuSign, who had 1.5 billion for the year. So if you average out that 400, you're probably getting close enough to just under it, maybe just around the million mark. But the problem is that Adobe doesn't split out just the signature. So there are other solutions in that 400 million that are not really comparable to what DocuSign's offering. So you can't really directly compare it, but it is something to be able to monitor. How Adobe are growing that document cloud.
I've got a quick question. In the long term, how do you see DocuSign competing with Adobe, considering Adobe have, I guess, a ton more assets to, cash in the bank to be able to kind of pump into their version of DocuSign? You know what I'm saying?
Yeah, no, absolutely. I think that the biggest thing with DocuSign is the analytics. I think this is really, if you're investing in DocuSign, you're investing on their analytics. You're not really investing in DocuSign just to sign a document. Because I think if you just want to sign a document on its own, you could probably just do it with Adobe because you're going to have Adobe already. But I think if you want to manage the entire document lifecycle, I think you'd be going with DocuSign, because at this stage now that Adobe could well catch up, and I'd expect them to put resources into this area. But at this stage, DocuSign are definitely ahead in terms of their analytics and just the overall suite of tools that you get as part of the document lifecycle management. So I think at this stage, DocuSign are ahead, but this is one of the key risks, I think, is Adobe lurking in the back.
Yeah, thanks. That makes sense.
For my company, at least, we are already using the phrase "I'll DocuSign it," so that's a positive sign for me. Because I also signed my new contract. We use DocuSign, like it has like a barcode and all these things. And for some clients, they said we will send it to him and he will DocuSign it. So for me, that's positive because we have a lot of Adobe products in our in our software, but we are still using DocuSign for like signatures and these contracts. So I think, you mentioned that, Adobe has a lot of other packages to kind of bundle and give like a discount to businesses, but I think, you can still have a separate one for this niche of services.
Yeah, exactly. And I think what works well for DocuSign as well is that all of their tools, they directly integrate with like Word. So a lot of documents are drafted on Word. So DocuSign directly interacts with Word. So you're nearly almost layering another stack of software on top of Word. So it does make it really powerful. So you're not completely changing the core document, which is like, a Word document from Microsoft Office. So it does work well with Microsoft Office. Moving on to management. So DocuSign was originally founded in 2003 by Kurt Lorenzi, Tom Gosner, and Eric Ranf. So none of the current founders are part of the executive team. So ideally, you do like to see founder-led growth stocks. DocuSign isn't one of those at this stage. So Dan Springer is the current CEO, and he joined in January 2017. So he's been there over 4 years. he came from a tech background. He was involved in a tech startup, and they were eventually bought out and acquired by Oracle in 2014. So he does have a tech background. Now, I think the thing with Dan Springer is that I was having a look on Glassdoor, and he's really, really highly rated as a CEO by his employees. And we all know that Glassdoor can be, and there's generally not anything held back there. So if somebody isn't liked, that will certainly be put on the internet for everyone to read. So he's actually got a rating of 4.7 out of 5, and 98% approve of him as CEO. So I think that's really, really strong. Like he's doing a really good job there. He's well liked, and he does seem to be moving the company forward in terms of the analytics and that side of the business. So it is, not ideal that it's not founder led, but I think when you have somebody who's come from a good tech background and knows how to kind of push a company forward, I think you have to take the positives from that aspect. So moving on to the risks, I think I touched on the biggest one there, and it really is like Adobe and their document cloud offering. A lot of people use Adobe, and they really uses PDF. So it is a risk that if Adobe try and just start getting their analytics going, and they go after the agreement cloud, they could eat into the market. But at the same time, I think it's a very big market. I don't think that it's a one fish in the pond. I do think there is opportunities if Adobe were to get going, but I do believe at this stage that DocuSign are ahead in terms of the market leadership, but it's a risk that you definitely have to be aware of. And the second one is the valuation. With a lot of these growth stocks, valuation is nearly almost guaranteed a risk, but you kind of have to weigh it up. And they're currently trading, if I just check the price today, they're currently trading at a price to sales of 25. So, it's not enormous, but if you were to scroll back about, I'd say 2 months ago, it was about 31, 32. So it has compacted a lot, which I think the risk reward now is at a really good price, but it is still expensive technically, and that's just something you kind of have to have the stomach for. This could shoot up 20%, but at the same time, looking at the price history, it's down about 30% in the last month. So valuation is always an issue. The opportunities, the biggest one that I can see is their artificial intelligence. They're really, really working on this, and they call it DocuSign Analyzer. So it is. Yeah, I'll continue. I think people are joining back again. So sorry about that, guys. Just some technical issues again. Got kicked out. So where was I? Opportunities. The artificial intelligence. I think it's really where the bet on DocuSign lies. So if you really think about it, where DocuSign comes in, it can essentially, or will have the capability to read a document, analyze it, and approve it, make amendments to it, or anything like that better than a human can do. So it'll be able to do a clause analysis. So let's just take an example of a law firm or something like that. So they'll have hundreds and thousands of contracts and agreements, and when it's done by a person, you could have lots of different individuals doing separate contracts in different departments of the same company. So the risk there is you're giving different terms to different clients purely because human X made different amendments to human Y. But with the artificial intelligence capability, it can all be done by the AI. So the AI will be able to read all of the contracts, it'll be able to analyze all of the contracts essentially as a central depository. And you can just funnel all of the contracts through this software, and it'll be able to give you consistent language across all of your agreements. And that's simply not possible with people. It's just not. You could have one person then looking at 500 contracts, and that's just not the way it's done. Like, you have different people looking at different contracts. There's no one person that looks at every single contract. So with the AI, you can have essentially one person or this bot looking at all of the contracts. And like, if you really break it down, you could have a 50-page document that could take one human a couple of hours to review. And they might make mistakes because humans are prone to error. But with the AI, you could load the contract in. It could be done within 2 minutes, fully reviewed for consistency checks, risk mitigation terms. You could, highlight certain terms that don't fit in with your company. So I think really that's the biggest opportunity. It's the AI, and it's not just signing a document. The second one, I think, is what I refer to as the green movement. So DocuSign is paperless. It's all electronic. And I think the world is moving to a more eco-friendly environment. Paper, the amount of trees, tons that are felled every year just for paper is enormous. And I think you've even seen that with Biden in the US. Like, paper is just probably going to be on the way out. And I know it's anecdotal, but I work for a financial service company. They're multinationals, and there's probably two aspects to this. So working from home, we're switching to a 2 days from home period, even after COVID. So that simply means that paper just won't be viable. If somebody's working from home and somebody's in the office, it's not going to work with paper. Electronic signatures are going to be the way forward. And the other part of it is offices are moving to hot desks. So with reduced capacity, you're not going to have your own desk. So you're going to need a paperless office because somebody else could be sitting on your desk tomorrow. Paper is just not going to really work in a remote working workforce. Paper is I really think it's on the way out. Electronics is just so much faster. The errors that you have with paper as well. I think that the green movement is what I would probably call it. Just paper is being phased out. So I think that's a really good opportunity as well for DocuSign. And that's pretty much it for me. Just to discuss, I do have a position in DocuSign. But this is all just kind of it's not investment advice. It's just my thoughts on it. So yeah, that's DocuSign.
Just a question, Wolf, because I think that I also hold DocuSign, and I think that there's a lot of competition for the e-signature market, obviously, because it's nothing sticky at all. But I think that there's not so much competition for the contract lifecycle management, and I think that DocuSign is just using the e-signature segment to push clients to hire the contract lifecycle management, which I think has high conversion costs. What do you think on this?
Yeah, exactly. Like, they're almost giving away the e-signature for free, to be honest. Like, it's really, really inexpensive, and they offer the free trials with the e-signatures. I echo 100% what you're saying there. It's really almost like a funnel to get you on board, to get you just using the e-signature, because the e-signature was not really an option for a lot of these. It was essential the past year. So it was an easy way to get potential customers on board. Once you have them using DocuSign and they can see the benefits of it, it's very easy then to upsell. So if if a company is going paperless, it's very easy then to say, right, well, we can manage all of your contracts for you. And I think it's probably a no-brainer for a lot of companies. Like, if you're moving to a paperless world, and there's a lot of industries that there's so many contracts, like in finance, especially in accounting, legal, you just be amazed at the amount of paperwork that is involved. And it can be, really time consuming dealing with a lot of paper. So DocuSign really saves you a lot of time. I'd argue that Adobe do it as well, but I think it's the life cycle management that you want to use DocuSign. It's comparing it up to signatures, kind of as I mentioned, that kind of golden nugget really is the payment aspect. I think that's really how much money that saves companies in terms of cash flow, expenses, chasing invoices, chasing docs, trying to get paid. I think that payment function is very much underrated.
Can you hear me now?
Yeah.
Oh, okay. So I saw again some people in the previous one, they had requested to take the mic to ask questions, but in the new one I don't see them. So if there are are there any other questions for DocuSign or for the previous companies? If anyone didn't have the chance to ask a question, I think we covered pretty much everything. But if there's any chance we missed something or someone needs to ask anything, I think we can wrap it up. Okay, so thanks guys for the presentations. It was very detailed. And despite the technical difficulties, I hope people got some value from this. And hopefully next time, well, I'm not gonna get kicked out from my own spaces.
Yeah, thanks, Kostas.
Yeah, thank you guys for accepting the invitation and for all your effort to make the presentations. And looking forward to the next one.
Thanks for organising, Kostas. And thanks to all the listeners as well for tuning in.
Yes, thank you everyone. And for sticking around despite having to do three different spaces to get it done. But yeah, thanks for sticking around and see you in the next one.
Cheers, guys.
Cheers.
Okay, bye.